Okay, just thought I'd do a quick weekend look through the markets. So, pretty good day on Friday. We're going to just go through these markets one by one, as we do. Been kind of range bound really for a few days. Let's just jump onto the markets. I will just refer you to the share scope piece I did again. If you go to the share scope tutorials, you will find it. Just some interesting levels, what the markets come into, what we were waiting on, and you know, first sort of real areas to watch the markets is basically. And you know, I'll say again, the market could bounce here and then take the lows out. You know, we don't need to know where the market's going to go. It's just good to know where we sort of are in the sort of cycle so far. You know, I've said it before, it would actually be better for the next, you know, 10 years maybe if we went a bit lower first. But I'm not going to make predictions on when it's going to find its legs, this market. I'm just going to, you know, trade it when it does. So let's just buzz through these markets and have a quick look at these levels of interest. I'll just double click and just move out. What I will say is, you know, it's going to be pretty much doom and gloom. If you've never been through a market cycle, especially with money in the markets, it's going to be pretty much peak doom and gloom, and you're going to be scratching your head wondering why stocks are going up, and you're not going to believe it. That is the reality. So you just got to come into this with an open mind. You know, it is what it is. The best thing to believe in is just the price of the stocks themselves. When you start seeing stocks rising and start to notice groups, I mean, for me, it's start to see the bases build, and you start to see the sectors what are holding strength, and accumulation starts coming into them. You know, it's pretty obvious to us who've been doing this a long time. It might be sound a little bit strange to someone who doesn't sit at the markets every day. So, you know, if I share out a screening link, you know, over the next week or so, just come and view it and just see what we do, and just try and do something every day, and you'll get in the sort of feel of how the markets actually trade. You know, you see things in the charts what you don't believe should be happening, and then they just keep, you know, banging away at, you know, hitting the screens, and all of a sudden, you know, oil's on a sector run, or, you know, that's how it works. You know, you very rarely believe it at first, even me. But you know, I don't trade on what I think. I just trade on what makes the money for me over time. It's a game of riding the sort of cycles, or the tides, whatever you want to call it. The tide is going out at the moment. It's a spring tide. You know, spring tides have a little bit more pull to them. They have higher, you know. On the way in, they go a lot higher. On the way out, they go a lot lower. So, you know, that's what a spring tide is. You know, that's what we're in. We're in the spring tide cycle. So, at some point, you know, they'll find their sort of area and start to, you know, start to turn. It's as simple as that. So let's just go through these markets. You know, Papa Dow, we're into really obvious, and I can't say this enough. You know, people are sort of, you know, only looking at charts like this, and they're just looking at all the doom and gloom and all the pain. And I'll tell you now, that's really orderly, and it's just really orderly and back into a really obvious area. And you know, well, that's hindsight. No, just go to the share scope tutorial and have a look where we were looking for. It's not hindsight, it's just really obvious. If you zoom out the charts, you're going to see more than if you're looking at these things with through a magnifying glass. And industrials, sorry, that was transport's the first one. Industrials, Papa Dow. yeah, we're down into this area, aren't we? Real obvious area for the markets. It's just a 50% sort of retrace of the COVID run. That's pretty normal. Let's move out of this now into the S&P. S&P is the strongest structurally. So, look at this previous level here. It's the last one to land in the zones I was looking at anyway. NASDAQ. I don't want to move this, but I know I need to at some point. I know I need to move it over and get it in. Oh, I've blown it. But I hate doing a tutorial and then moving the goalposts. No, that's where they were set when I did the tutorial. Russell 2000, yeah, it's going to start to look like an inverted base, isn't it? But it's one of the weakest markets in a risk-off, in a risk-off environment. I'll tell you now, the DAX is a wild market. This is pretty normal for the DAX. I know this is previous highs, but that's 50% area. I'll just say now, yes, below this level on the FTSE 100, everyone's doom and gloom. If it goes below there, that's it. The world is going to end. I'll tell you now, nobody looks at the FTSE. Well, don't look at the FTSE 100 and make huge predictions like that. It's not that important. The FTSE 100 is just, it could just go wherever it wants, and it's really not really going to affect someone who trades stocks, even though it's made up of blue chip stocks. It's really not really not really. Is that a word? It's not. Those levels aren't important. The FTSE 100 levels are just not that important. Certainly for my sort of way of doing things, never have been important to me. And the 250, the world's going to end. Stocks are pretty bad out there. This one's a very weak market. Pretty orderly, but, well, nice trend, we'd say, wouldn't we? But yeah, it's coming a lot, hasn't it? A little bit wilder, obviously, being a little bit more mid caps in there. And the FTSE small caps, I'd say that is still pretty orderly. It is what it is. Let's throw up some meaningful moving averages on the small caps. There's your 50, there's your 200. So obviously, the 200 was a major player in the pandemic for many markets, wasn't it? And the 50 was as well for the leaders. So that's where we are. Let's not get too twisted up on these things. It is what it is. I just wanted to have a quick look through those markets myself, so I thought I'd just do a quick video. We are in that area where I'll bring my trend model up as well. We're in that area where people throw the towel in. It really rinse and repeat. So you're in a market environment now. What could it could be a generational low. You don't know. It's certainly the first real bear leg we've had. We haven't really had a bad bear leg. We've had some horrible volatility, and we've had a market crash, but we haven't had one since the GFC. What's been this kind of market where it's actually trending lower. Look at the pandemic and then look at stocks. Stocks look better than the pandemic, the move in the markets, moving the indices. In this kind of environment, the move in the indices looks pretty awfully, but stocks look terrible. So once you've got to set in, the real players have been distributing all the way down, and the stocks are outperforming the market to the downside, aren't they? It wasn't really like that in the pandemic. There was some horrible sort of vol and horrible moves down, but they kind of held their own a little bit more. So just something to think about. You are in an area here where if you've got your head stuck in the sand, or you're hiding behind the curtains or whatever, and you're scared of this is where you just just go, hang on a minute, what mistakes did I make? Risk management. The only people who survive to really make the most out of the next market leg are the ones who had risk management in place. And I'm not going to sort of blow my own trumpet, but we've traded this flawlessly, as we've traded every market correction and bear leg. Not that we've had a big one since the GFC, but we've traded it, impeccably. Couldn't, just honoured my exits on all my stops. Got a few paper cuts. That's part. It's always going to be like that. And I'm high cash, still just waiting to see those leaders. Another thing what's going to happen is you're going to feel, the market will rally and you'll feel like you need to chase things. And what usually happens is the market rallies and it either it backs and fills. It always consolidates through time and price. And the stocks, though you'll get some leading stocks what are going to be set up when the market does bottom, there always is. The glut of new trends kind of starts a little bit later. So the market makes a rally, stocks pop, and then they coil up again. And if the market holds, they coil up tight, and they start to break out, and it starts to be like shooting fish in a barrel. And that's basically, you don't have to be a hero in this game. You don't have to be the first person through to get back into the markets. You will get a lot of people saying, this is why we're fully invested. All those people in cash are missing out. You never miss out. You never miss out. A bounce is not a trend. It takes a little bit of time. The pandemic did the elusive V bottom, and still, I didn't get fully invested until way after, but it was huge for us. So, usually the market will go into this consolidation phase to decide whether it's going to go higher or lower after the bounce. And that's where you're going to make some pretty good decisions, I think. So don't get the FOMO. If you do see the market rallying, it's about dangling a few toes. You're always going to get a few bitten off, but building on success and building on risk management. And if you've got your work in place and you know what your risk is, it's very easy to calculate how much risk you've got in the market and how much you're pressing on the gas. You're not going to have the anxiety when you're dangling those toes. You're just going to do it in an orderly, methodical way. And, happy days. Hopefully, it turns out to be a good trend. There will be whipsaws, but, just thought I'm just trying to get across how I do these things, and no prediction is needed. Absolutely nobody has to get the market call right that the bottom is in. It's not even part of making money being right on the turn of the market. It's really not important. All that is important is when stocks start to trend, you start to basically put money to work. Nobody's flicking a switch here. It's a time thing. And part of really good risk management, whether you're an investor, a trend trader, trend follower like myself, is building on success and easing your risk into the market. So you're not just throwing a lot of risk at the wall and hoping some will stick. As you trail heat out of one trade, trail risk out of one trade, you add into another or add into the same trade, and your risk isn't going up. Your risk is basically easing into the market to a buffer. I use a 10% buffer, and as the market frees up, lets me trail my stops, my risk, it lets me add more. I don't go over that buffer. I don't get over risked in the market. Never have done. Never. You don't need to. So, just this is my sort of I've been doing this for a long time, since the GFC. So I run trend models on the markets and this sort of 350 stocks as well. So this was the pandemic. This is where we are now. We start. We might get embedded to the downside like we were embedded to the upside here. I'm not going to predict this, but let's face it, we know we're, if we got another bad market leg from here, you know, I would be, you know, pretty confident that you know, the bottom was in, but you know, the bottom might already be in. No predictions. It's not important, but just to sort of get a feel of how long we've been drifting. This is where it was basically mid 21 when the market started running out of steam. So you can see that here, 4th of the 5th, 21. That's where the 350 stocks started to fade. So we'll just say noticeably, and we didn't know if it was a pullback like this one here and back to highs. You never know that until after the fact. But, you know, in hindsight now we do know. The market topped in May 21. As, you know, the 350 stocks. I can do it for the S&P as well if you want, but, you know, that's where the market topped for the UK markets. That is the truth, you know. So just just something to note there. A little motivational speech I would like to think of it as today. Stay motivated. Keep just, you know, doing that work, and you know, don't get lost in the bias. Okay.